Welcome back to another weekly update on the Stable Ad. You might notice that things sound a little bit different today. I'm going to be trying some calm background music for myself, but also to make these updates a little bit easier to listen to. And hopefully it works, and if it doesn't, just let me know in the comments. Also, I am starting to change things up a little bit as this channel begins to mature. I'm going to continue to make these videos every week, but they're going to focus a little bit more broadly on the bigger picture, the most important developments in stablecoins and DeFi and on-chain yield. And my Substack right here is going to be the place where I share the full details, my actual portfolio allocations, the actual full portfolio, the protocol breakdowns, and any changes I make daily or week to week. So if you want the entire picture, including what I'm holding, where I'm earning, what my actual up-to-date APYs are, all that kind of stuff, you'll find that over here on Substack. And these videos are going to continue to stay focused on the trends, the insights, and the lessons worth knowing. All right, so let's get into it. A lot's happened this week in the world of stablecoins. Visa experimenting with on-chain lending, BlackRock launching their new fund, Coinbase stepping into payments. In other words, we're beginning to move, I think, away from the speculative phase of crypto into the more infrastructural phase of crypto, where we begin to stop using words like crypto, for example, to talk about the entire industry, and it becomes more part of our normal vernacular, and it becomes just part of how we kind of operate on a day-to-day basis. However, not everything was smooth this week. We, as many of you know in this space, experienced the largest liquidation event in crypto history, almost 20 billion wiped away. So we're going to talk about that. We're going to talk about what I'm doing with my portfolio, or more or less what I'm actually not doing. Sometimes not doing things is the best thing to do. I'm also going to wrap up with some of the APYs that I'm looking at, some really kind of interesting things that are worth exploring, and what I'm kind of just beginning to do some investigating on. So stick around to the end so you can see some of those juicy APYs that I am considering adding to the portfolio and just kind of exploring more in general. Let's take a quick pause. If you'd like a simple reference guide that shows you how I think about building a stablecoin portfolio, from risk tiers to position sizing, and even how insurance fits in, I put together a free guide you can download. It's the same framework that I use myself, designed to keep things steady and easy to follow at a glance. The link's right below this video. Grab the guide, and while you're there, make sure you're subscribed so you don't miss the weekly updates I share on how I'm adjusting my own portfolio. All right, let's get back to it. All right, let's get into what's going on over here. So the first thing we mentioned here was BlackRock unveiling their new fund. This is basically a Genius Act compliant money market fund. And what that means is that not just Circle, but any new player that wants to issue a stablecoin, in order to comply with the Genius Act, they have to do a lot of heavy lifting. And this makes all that heavy lifting really, really easy. They can just now hold this Genius Act compliant fund from BlackRock, and they can start issuing a stablecoin and be compliant with this new Genius Act. And that just allows for more people to enter the space, more people to play around with stablecoins. And I think this is, again, one of those sort of infrastructure plays where it allows corporate coins to develop. I mean, you could start seeing, for example, maybe Elon Musk starts playing around with the X coin, and you can start seeing Twitter or X start playing around with payments using their own stablecoin and things like that. This allows for more people to enter the space quickly, easily, and be fully compliant with US law. And I think it's a really, really big deal and worth paying attention to. Another amazing announcement that just really happened is that Coinbase announced coming into the payment space. They're going to, as they say here, simplify vendor payments, eliminate chargebacks, and offer seamless APY integrations. For a little context, I've been in payments for 20 years. I built a fintech business in the payment space, and I can just tell you that US payments are just unbelievably outdated. Chargebacks and delays and just layers upon layers upon layers of middlemen. This is why Stripe came into the space and was able to make create such a big business so quickly, because they try to simplify a really complex business. And while Stripe has done an amazing job, there's so much more to be done. And I think that while Coinbase isn't going to be like the silver bullet that's going to change the space entirely. I think it starts the process of doing that. And because U.S. market specifically loves credit cards, we're going to need to see the big credit card companies start to come into the same kind of thing: Visa, MasterCard, Amex, etc. And I think it's going to be tough for these big incumbents to make these big changes. We'll see the nimble companies like Coinbase do it first. But if Coinbase is able to make enough headway in this space and take some market share, I think Visa and MasterCard and others will quickly jump in and be able to kind of do the same exact thing, only in the credit space. And speaking of Visa, they just dropped a huge report, this really, really massive report that most people are completely ignoring. Visa is a $570 billion publicly traded company that moves something like $15 trillion a year. And they're saying that stablecoins could power the next wave of global finance. This is not just payments they're talking about. We're talking about things like on-chain lending, real credit markets, and settlements between institutions. So this is a really big deal. They're basically saying that crypto is no longer experimental. This is infrastructure. It's taking shape under everybody's nose right here. This is big, big, big news. So all of this, it just gives me more confidence that we are in a massive secular trend, both in the crypto space in general and in the growth of stablecoins. But as I mentioned, not all was smooth sailing this week, and not all of this news is exciting. We saw $19 billion, almost $20 billion wiped out of the space. I did a deep dive on this earlier this week. I'll link that video in the show notes as well, that talks about exactly kind of what happened in a little bit more detail. Talks about the Binance broken oracle that caused just massive amounts of liquidation and panic. But when these big sort of liquidations happen, it affects everything, not just the prices of crypto tokens. And while my portfolio did really, really well through this, and just sort of again proves why I'm doing exactly what I'm doing in this space, in order to make money no matter what the market does. The market could crash completely, which is what it did, and my stablecoin portfolio performed incredibly well. But there are changes to the space, right? And overall, I've seen APYs just lower in general across the board. They didn't go to zero, of course, but they've gone down. I've probably lost about 100 basis points in projected annual APY. So we were projecting something like 13 or so percent. Now we're in the 12% range. But again, that's still really, really good if you take a kind of step back and you zoom out and you look at it from a bigger picture. Earning 12% on your money is remarkable. So this might sort of cause us to look at the portfolio and say, well, maybe we need to start reallocating and maybe start taking bigger risk and going to the higher risk stuff, because DeFi performed really, really well. And so why not take more risk and go to higher APY stuff? But I tend to kind of take a look at these days and sort of say, let's just let the dust settle. Everybody's reallocating. Everybody's sort of refiguring out, at least the people that survived, right? There's many people that didn't survive this liquidation. They're just out completely and entirely. So I say let the dust settle. And that's exactly what I'm doing with my portfolio. I'm letting the dust settle. I'm seeing how APYs balance across the board in my entire portfolio. And I'm going to give it a couple of weeks at least just to see where things rebalance. And I could see them going a little bit lower as people begin to say, okay, that was a huge event. I need to move to more quality. I'm going to put my money into stables and do kind of what I'm doing with my portfolio. I could see a lot of people moving to stablecoin strategies for a little bit as they refigure things out and APYs continue to dip. And then I could see them start to grow up again a little bit as the overall market begins to get a little bit more, maybe a little bit more bullish. We'll see how it shapes out. But in general, I really like what I've seen over here in auto. The pools, again, they all went down here. Every single one of these pools went down, but they're still really solid. Over 10% here on Plasma, over 12% on Base, and almost 10% on Arbitrum. Really happy with these plays over in auto here. And I'm just mentioning these because it's worth mentioning. These are good positions here. Euler, these are my Euler plays on Plasma. They're almost all over 10% here. We can go over here and take a look at on Avalanche, and we can see the positions here on Avalanche. Let's take a look here. Some really nice APYs over here on Avalanche 2. Excuse me here. We've got some really cool things. We've got this Keyring ZK verified cluster paying 30% over here with $19 million in this one. I have not personally put money in here because you have to do some KYCing. You have to do this like ZK verify thing, which I don't know how comfortable I am with that. I don't think it's unsafe necessarily, but I don't know. I stay away from things like that a little bit, but I mean, juicy APY, right? So these are really, really good. Another one that I bounced in and out of, right? I've switched from this on Compound. I've switched from this position to this position, this USDC coin to this Tether coin, back and forth as these APYs fluctuate. But again, one of the things I keep mentioning is that sometimes it's best just to sit in it, let the thing fluctuate. USDC coin, this thing was paying 30-something%, then it went down to 3%. Now it's back up at 20%. I've moved the money back into this position. I'm just going to sit in here. It may drop to 3% again, but I'm just going to sit in it for a little bit and just let it do what it's going to do. But if it stays, juicy APY over here on Compound on a really low risk play on Polygon. Let's move into the more sort of broader market and just some of the things that I'm looking at in general. I've talked maybe a tiny bit about Yo. Yo kind of operates a little bit like Auto does, and in which they reallocate your assets into sort of a vault across multiple different protocols and blockchains to maximize yield, as they sort of say here. And here they track the best risk-adjusted returns. How do they track that? They are, I think they're owned by or partnered with this company Exponential Phi, and they're backed by some crypto VCs as well. And Exponential, what they do is kind of cool. They do like this risk rating for all these different types of DeFi pools. So you can see here they like the way I do on my channel, and how I rate things. They rate things here. I don't know exactly how they do it, but here's how they do it. They got lowest, low, all the way up to high, and all that kind of stuff. And so based on all these ratings and how they rate, you can see their pools, their protocols, and their assets, and they rate all these things, which is pretty cool. It's worth checking out on exponential.fi. Yo uses all that data to make decisions on how they deploy their stablecoin position across different protocols and platforms. And you can see here exactly what they're doing. They're using the same auto that I was just showing you a minute ago over here, the old Tokemak here. They're using this auto pool on Tokemak, which is now known as Auto, and their risk is moderate here. They've got these fixed positions on Pendle, or it looks like maybe this is not fixed position. This is a yield position. No, it's a fixed position, excuse me, on Pendle here. They got Fluid, Go. A lot of the things I actually hold personally in my portfolio, they're holding over here, but they're doing a bunch of other things as well, and you can see exactly how they're doing it. This is to me, this is a higher risk protocol. It's newer. They do have an audit, but I think it's only like one audit. They've got a bug bounty, but it's something like $10,000 for their bug bounty, which is really, really small, a small change. And this is a lot of money here. And while generally high TVL gives me a lot of confidence because that means this account is liquid, it also is a high attack vector, right? So when you see high TVL, if you're a hacker and you're looking for things to potentially hack, you want to go after newer protocols that have a lot of money to attack. So I like this. I'm interested in it, but I would consider this squarely in the high risk play for me, which means I would put no more than 2.5% of my portfolio in a position on Yo. But again, worth noting. Aave, I noticed, I was just kind of going through the marketplaces on Aave here, and I noticed this USDT lending pool here on Aave. It's paying 12.95%. There's a bunch of these Celo rewards. This is on the Celo blockchain, which is basically a mobile sort of first blockchain. I have not put money over here on Celo, or Celo, I don't know how you pronounce it, but it's juicy. So I thought I'd mention it here. And it's on Aave, which is a low risk play for me, which is always nice. Some other positions I have this in the fund, but it's also a really, really nice APY. USDC on Delta Prime is paying 18.1%, on Avalanche paying 10.7%. Delta Prime for me is a high risk play, so again, I would put no more than 2.5% of my portfolio. I think my positions are actually lower than 2.5% on Delta Prime, but juicy APY right now that seems to be staying high. I mentioned this, I think, on last update, but Avantis is a newer protocol, and they have these junior and senior vaults, and pretty nice APY here. Again, I think this is the senior vault here on and it's paying a lot of money here. So definitely worth looking into, and I'm investigating it. I believe this is more of a higher risk play for me because I think there's a decent, if anything's attacked here, a decent chunk of, I think it's something like 35% in the senior vault that is that could be used to recover any loss of funds. So if this is ever attacked and money is lost, up to 35% of a position is up for being used to cover that position. So again, kind of a higher risk play for me, but this is something I'm exploring because it's really high. This is also on the Base blockchain, by the way. I haven't done anything over here on Hyperion, but it's super. This is a pool on Hyperion paying 26%, a stablecoin pool, USDT and USDC, super high over here on Hyperion. Again, really, really high TVL and really high amount of volume, meaning a lot of trading between these pairs. So if you're over on Hyperion, this is definitely something interesting to look at. On Curve, I was just kind of browsing through some of these incentives on Curve. These are on Ethereum here, and you've got 12.56% Gears paying for this one. This is an ETH pool, but we can see PayPal here is paying 10.68%. RLUSD is I believe Ripple's stablecoin, and I'm seeing a lot more of Ripple pushing their stablecoin, and I'm seeing a lot more incentives being paid for that stuff. So it's just something to kind of keep in mind and take a look at that I'm just exploring. I haven't touched RLUSD at this point, but look, Ripple's a huge company, and I have no doubt that their stablecoin is well backed. So something I would take a look at. I haven't done the research on it, but I'm exploring it. Speaking of Gearbox over here, these are on networks that I haven't messed around with over here. This is Etherlink, which I have no opinion on, but they're paying 25% over here on Gearbox. There's $11 million in this pool. Not too shabby over here. This one's on Hemi, which I have no idea what that is. So again, I haven't done the research, but 16.96%, something worth exploring in any case. And I do have money in this pool over here on Plasma, paying 12.93%. So Gearbox doing some interesting things over here. Harvest. I do have money over here on Harvest. But look, we could see here this Moonwell position on Harvest paying 22.3% USDC. This one on Compound is paying 22.7%. This is on Polygon over here, by the way. Staked USD and staked USDE on Convex. These are all really, really nice APYs over here on Harvest, and something totally worth looking at. I check Moonwell often because Moonwell is the protocol that's supposedly sort of built to make DeFi really, really easy, and these are really, really interesting pools over here, right? We've got 20% over here on Moonbeam. We've got on Base 17.8%. So these are some really juicy APYs over on Moonwell. I may do a deep dive on Moonwell at some point. But definitely, if you're kind of newer to the space and you just want to make it easy, Moonwell onboard's really cool, and The onboarding is really easy with Moonwell, and the deployment into DeFi and to earning yield is easy. I tend to see these fluctuate a lot on Moonwell, and so I haven't deployed personally over to Moonwell at all, but definitely stuff worth taking a look at. These are a little bit low, for my opinion. 57,000 is stuff that I generally wouldn't consider or look at, but again, depending on what your tolerance is just things that I'm looking at. And that's it for this week. These are the APYs I'm looking at. We've had a really interesting week in the news cycle, and I haven't seen anything that really makes me think anything other than we're in a really good secular bull trend. I know that the macro news with Trump and China and all this stuff has made the markets a little volatile, but that's exactly why I've created the portfolio I have, and exactly why I've built the StableLad platform and portfolio, because I spent years in bear markets wondering how the heck I'm going to make money. And stablecoins are that way. And when you set up a portfolio that's well diversified and the risk is well managed and well balanced, you can make money in any market. It doesn't matter if you have $20 billion of liquidation, the largest liquidation event ever in crypto. It doesn't matter if the geopolitical position is weird and tariffs are going crazy. I'm continuing to make 12%, 13%, whatever it is, APY, and I'm sleeping at night. I haven't had to make any changes to portfolio. I just keep stacking and stacking and stacking. So hopefully this is helpful to you building your own stablecoin portfolios if you are. None of this is financial advice. This is just what I'm doing with my own portfolio, and I'm sharing what I'm looking at. But hopefully this is helpful to you. I would love to hear any suggestions or just what you dislike about this in the comments. If you like the music in the background, any of the changes I'm making, and go check out my Substack. There's a bunch of free stuff over there that's meant to be fully complementary to the YouTube channel, and then more in-depth stuff that I'll be doing with my own portfolio and sharing all those deep dives over there. Until next time, I'm the StableLad. Stay steady. I'm the StableLad, and if you like today's video, please hit that subscribe button. Every week I break down what's happening in the world of stablecoins and why it matters, clearly, calmly, and without the hype. This channel is for educational purposes. It is not meant to be financial advice, so always do your own research and manage your risk wisely.